Hi, I'm Jake Borbidge, Chief Investment Officer at Avidian Wealth Solutions. Every year we publish our private client report to give you our perspective on what happened, what mattered, and what we're positioned for next. Today I'd like to walk you through three important dynamics we see right now, straight from the pages of our 2026 report. First, 2025 proved again that fundamentals still matter. Yes, it was a noisy year. Tariffs, Liberation Day, geopolitical flare-ups, even questions around the Fed chair independence. But when you strip away all the headlines, the numbers tell a much calmer story. For the year, the S&P 500 returned 18%. International equities exceeded 30%. Roughly 3/4 of those gains came from profit growth, not just paying up for the same earnings. Only about 30 to 35% of the stocks outperformed the index, and the Magnificent Seven still dominated, but the foundation underneath was healthier than it felt at the time. We also saw the first real crack in the spend-to-win AI narrative when a Chinese startup showed that frontier models could be built at a fraction of the cost. That moment reminded us that markets need to be surprised to deliver above-average returns. And our edge is staying disciplined when expectations run too far. Second, volatility wasn't a threat. It was a tool that we used. The April drawdown gave us the chance to buy high-quality assets at discounts, reposition towards undervalued areas, and more importantly, harvest tax losses that will benefit your portfolios in years to come. What felt chaotic in real time became a strategic advantage in hindsight. Third, private markets are finally thawing out. After years of frozen exits, we've seen what many are calling the Great Unlocking. Global M&A is up sharply, IPO volumes are the strongest since 2021, and older vintages are starting to monetize. Private equity is rotating back into favor with lower borrowing costs, better exit windows, while private credit remains attractive for income, but with moderating tailwinds. Venture capital, the most levered to the AI theme, is something that we'll be offering curated exposure to later this year. The easy-to-hate real estate has a number of tailwinds forming, which boosts our confidence in pockets of recovery in apartments and institutional properties. At Avidian, we use a core satellite approach. We look for stable, diversified core holdings across real estate, credit and equity, and infrastructure, paired with high conviction satellite opportunities in thematics, deep value sectors, and selective AI infrastructure, and also secondary transactions. We believe these themes are constructive in 2025, and we continue to evaluate similar opportunities going forward. Finally, looking ahead, our current outlook reflects continued optimistic resilience supported by AI-related capital spending and fiscal policy. Inflation may moderate, but we expect it to stay above the 2% target. Rates are expected to remain range-bound with a slight lean on the short end. Volatility may be a feature, not a flaw. All said, we're overweight Japan, US mid-cap, and value stocks. We're underweight European equities, Canadian, and also UK equities. Our fixed income portfolios are focused on high quality credit. We favor mortgages over corporate bonds, and we still advocate for maintaining diversification inclusive of private investments because concentration works until it doesn't. Our approach remains unchanged. Tune out the noise, stay process driven, harvest risk premiums, and seek to provide institutional grade investment management with something even more valuable: peace of mind and a calm hand at the wheel, no matter what markets throw at us. Thank you for trusting us with your family's wealth. If you have questions after reading the report, please reach out to your Avidian advisor. We love hearing from you.